Hello everybody, my name is Mark. Welcome to another one of my investing videos, and in this video I am going to talk a little bit about the concept of how to ladder your options. And you've probably heard or know about laddering with bonds or CDs. But first, let's go ahead and go over my money and the put spread that I have been trading. And let's go to my transactions here. And once again, right there, when you see that message, that is golden. That means that you just made some money. Removal of option due to expiration. And that would be these 12 contracts that I sold to open back on the 6th. And today is the 16th, and I kind of laddered my puts a little bit, and that's why I wanted to talk a little bit about that. But I just made $99.98, so another $100 on my put spread. This red number that you see is the long puts that I am holding. I bought to open 9 contracts, strike price $12 on US Steel, ticker symbol X, and I paid $345 a contract, and that would have been back on December the 2nd. Today is December the 16th. So just in the first 14 days, 2 weeks of this spread, I've already brought in this money, and those options got removed right there. Those expired, made $140. So $240 just in the 2 weeks. So I'm making $120 a week. And so 52 weeks in a year, you can do the math. If this keeps up, I'm going to make a very nice profit, well over $5,000. Now, let's talk about laddering here. Okay. Now, this is bankrate.com, and I am just going to talk about how to ladder CDs. And I got these organized in order of the term or the expiration, if you will. And so you can see that this is a 2-year bond right there, Sallie Mae. I don't know these banks. It pays 2.15%, and as it gets shorter and shorter, 18-month pays 2.1. 1-year CDs are paying 2.1%, and it gets lower and lower. And 9 months pays 1.9, 6 months pays 1.9, 1.8. Still, you probably would much prefer to get the higher rate of return, right? And so you might want to put your money in this 2-year CD. But the catch is you cannot touch your money for 2 years. They're not liquid. And so the answer, the way to counter that, is to take, there's 24 months and 2 years. So let's say you have $24,000. So what you would do is you would take $1,000 and open up a 2-year CDs, and then a month from now open up another 2-year CD, and then another month, in 3 months you put another $1,000 in a 2-year CD, and you would do that 24 times. And then 2 years from now, you would be making a monthly income. And the bonus of that is because you don't have all your money locked down into one single transaction, you can start withdrawing money month after month. And that's called a CD ladder. It's a very good, safe way to make some income, especially with CDs, because CDs are insured FDIC up to $250,000, I believe. Now, believe it or not, you can do the same thing with options. And let's go ahead and look at my favorite stock, US Steel, ticker symbol. And so let's go to Steel, and let's take a look at some options here. Okay. Actually, first, let's take a look at the chart. Okay, so this is a chart, and let's go to a long-term chart. Let's go to like a 5-year. This is a very long 5-year chart here, and we are like right here near the end. Okay, and it looks like the low is right at the $10 level. So between you and me, it's a pretty safe bet that you could probably sell to open put options at the $10 strike price level. So let's go ahead and look at the $10 strike price. So here are the options, and let's go out 123 days, and let's see what we can get for the $10 puts. 123 days, that's 4 months. So let's view the chain, and it looks like the $10 puts are paying. The bid is 42, the ask is 49, and the last is 44. So it looks like that if you put up $1,000, you would make $44 on your $1,000. That is a 4.4% return in the next 123 days. Now, you may have, I don't know, let's say you have $4,000, 4 months. Now, if you wanted, you could sell to open 4 contracts at a $10 strike price. Or a better idea, or not necessarily better, but a safe alternative would be to take 1/4 of your money, expires in 4 months, take $1,000 of your $4,000 and sell to open 1 put. And then you would get, and that's of course if steel trades above $10 between now and the next 4 months. And I'm here to tell you that $10 is a very safe level to be trading the puts. In the worst case scenario, if steel goes below $10 a share, then you end up buying 100 shares of steel at $10 a share. So that's not a bad thing. So it's not like you lose money. Okay, all you're doing is you're taking the $1,000, you're selling to open a put, and then you are going to create a little ladder. So what you would do is you'd sell to open that put, and then a month from now you would sell to open a put for the following expiration, and those aren't even out yet. That would be for May, but those will come out a month from now. And of course the catch is you may not get the same premium a month from now. If steel goes up to $15 or $16, I can guarantee you're not going to get $45 for another put. You'll probably have to sell the 11s or the 12s. But $10 strike price, that's very far in the money. So right now steel closed last Friday. Today is Monday, December 16th. Steel closed at $13.71. So in order to even begin to worry, steel would have to go down $3.71 a share. That's like a 25% drop in the next 4 months. Now, I would not put it past steel to do something like that. Steel, as you can see, is very volatile. But if you come up with some kind of a trading plan or an investment strategy, then what you could do is you could take the $1,000, sell to open your $10 put, and then just tell yourself, okay, if steel goes down, then I won't sell to open another put a month from now. Let's say a month from now, steel goes down to $12 or $11. Then don't sell another $10 put. Wait for steel to go up. And if that happens, you're still going to make that 4.2% return, which is way better. I mean, it just crushes the CDs, and it's very safe. And again, the worst case scenario is if steel goes below $10 a share, you end up buying 100 shares of steel at $10 a share. And on top of that, if the order gets filled and you sell to open the put, you keep the premium that you get, $44. So if steel goes down to, let's say, $9.50 a share, then you're really not even hardly in the red. You're barely taking a paper loss. And then you can start to sell covered calls and do the same thing. So that's kind of how the idea of ladders work. And I've kind of been doing that with my money with the weeklies. And if we go back to my transactions here and we take a look here you can see I sold 6 puts, and then I sold 12 puts, and that was on the 6th. That was before the first 6 puts expired. Those first 6 puts expired on the 9th. I sold to open 6 here, and those expired on this day on the 9th. But then I sold to open 12 because my 6 puts were showing profitability, and I knew that there was very little chance that steel was going to go below $13 a share. So I didn't feel the need to buy to close those contracts, and I just flat out opened another 12. Now I just did the same thing, and currently I am holding on to 9 put options, and those expire this Friday, December the 20th, 2019. And when I sold them, I got 15 cents a contract, brought in another $128.98. So if steel trades above $13 a share by this Friday, then I'm going to collect another $128.98. I'm going to get another one of these lovely messages saying removal of option due to expiration, and I'm going to get to do it all over again week after week, and I'm going to make well, $5,000, let's say, if steel just keeps trading and the pattern is solid, it's holding true. Let's go to the 3-month chart. This is the 3-month chart right there, and right there was the earnings, and this is the pattern. It's a strong pattern. This is the $13 level right there, and it's only dropped below like a couple times. And if it does drop below, the worst case scenario for me is that I end up buying how many do I have? 9. So I end up buying 900 shares of steel at $13 a share, but that's okay because I own 9 put options. So basically what I will do is I will have an option collar. So this is all really lovely stuff. So hopefully I've given you some good ideas on how to trade your money, how to make some money buying and selling options. So as always, leave a comment, hit the like button, whatever you want to do. Any feedback is appreciated. And until then, happy trading, and I will see you in the next video. Thank you and ciao.